Hey, hey, happy Wednesday. I hope you guys can hear me. I hope everybody is doing well today. I'm going to give it just a second for people to jump on because I know we had a lot of people interested in attending this session. Today, we're going to talk more about PPP. So you guys have probably heard some of this, but essentially we're going to keep diving into PPP because things are continuing to change. We're getting new guidance. We now have an application that came out on the 15th. We got some additional guidance from the Treasury on the 22nd. It keeps happening on Friday nights for whatever reason because they like to ruin my weekend by coming out with new guidance every Friday night. So I'm waiting to see if that trend continues this Friday. Let's hope not, because I would really like to have a weekend one of these days. Hey guys, I'm seeing you guys. Hey Marissa. Hey Kelly. Hey Michelle. I see you guys. Awesome. So basically, this is streaming live. This is on my Balanced CFO Facebook page. This is in my Financial Literacy for Women Business Owners Facebook group. If you're not in it, come join. Even if you're not a woman, we have plenty of men that have joined recently. And this is also streaming live to my YouTube channel. So if you have not liked and subscribed to my channel, please do that because it makes all the difference in the world to me. So wherever you are watching me from, and I see Catherine is watching me from YouTube. So hey, Catherine. Hey, Tina. Hey, Bree. Good morning, everybody. Okay, it's Wednesday. I had to remind myself, not only with all of this going on right now, not knowing what day it is, then you had a holiday in the mix, and I just have no idea what day or time it is. Plus, I was up till 1 o'clock in the morning uploading a YouTube video for you guys. So I'm tired. I had my coffee. I feel a little bit better. It was a little tough getting up this morning. Okay, so for those of you who don't know me, you're wondering, who in the world is this girl? I'm Jamie Trell. The name's on the screen. Nope, wrong one. On the screen. The left-right thing. Still, I can't get used to it. And I am a CPA. I'm also a financial literacy coach and profit strategist. Usually I'm teaching you the tools that you need to understand your finances and use them to make and keep more money in your business. That is my main business. I sell online courses. I have a new one that is coming out in just a couple of weeks, you guys. I'm really excited about my financial fitness basics course. If you're not on it, go join balancedcfo.com/FFB waitlist. That one's going to be exciting. It's going to go into some of the information. If you're just sitting here going through all of this and this made you realize, heck, I need some help. I need to know the basics of my finances. What's up with all these taxes? What kind of entity do I need to be? What is a P&L? How do I read it? That's what we're going to be talking about in the basics course. Anywho, that's not what today is. Today, we're talking about PPP. So a lot of you guys got the PPP loan. Some of you guys have employees. Some of you guys don't. And I have been working with a fan-freaking-tastic, like, brain trust of ladies, okay? Bree's got me. She's putting the link down for the wait list. I feel like I need to pay you, Bree. But you guys, we have been putting in so much work. So you guys maybe have heard about this PPP tracker. Okay, we've been working on this PPP tracker. Now, this is different. Some of you guys downloaded my PPP planning tool. That was kind of a preliminary early on. Let's kind of get a general sense of what we should be doing with our PPP money. But now we're into it. And now we have more guidelines. And now we can build out something that really can help you track and really maximize your PPP forgiveness. Okay, so that's what we've been working on. It's the bomb, y'all. I mean, and maybe I'm a little bit biased, but Kelly, who's on here, Kelly Vincent, she is on here. Bree is on here, Bree Beers. They were with me in this. We have been working for a ridiculous number of hours, if I'm being honest, on this template to get to you guys. If you're like, what the heck, Bree, you got me on this. Give me a balancedcfo.com/PPP tracker. Okay, Bree's gonna drop that. It's also above. It's up there. Well, if you're watching me on Facebook, it's up there. If you're watching me on YouTube, it's down there. Okay, you can get the link and you can go grab that now. Now, if you'd already signed up for it, a lot of you guys had already signed up for it because you'd heard about it previously. It's in your inbox right now. Go check. Okay, check your spam. It'll be coming from Balanced CFO, which is my company. you can jump into it and take a look at it while we're talking. And so that's really, what I want you guys to do right now is make sure you get signed up for it, balancecfo.com/PPP tracker. We're going to talk a little bit about it today. I'm not going to do the full tutorial, you guys. Why? Because I literally recorded 2 full YouTube videos on these for you guys already. So I don't want to walk all the way back through it. When you get the tracker in that email, you will have a link. One of them will be for people who don't have employees, because I don't want y'all to have to sit through the whole full training, because this is a lot more complex when it comes to people who do have employees versus who don't. Okay, so there's one for you guys, and then there's another video for those of you who have employees. So the one for sole proprietors, I think, is only for no employees. Basically, it's like 18 minutes long. It's a breeze. Okay, there's only a little bit in this worksheet that you need to fill out if that's you. So we've simplified it down. For those of you who are my employers, though, sorry guys, it's like 50 minutes. It's decently long. You can watch it if you go watch it on YouTube. You can watch it on 2x speed if you really want to, and I'll just talk really, really fast through it. But I do encourage you, before you get into this, don't try to delve into this tracker without watching the video. Some of y'all are going to do that, and I'm talking to you. Now, most of the people in this group and most of the people that watch me are women. We like to have directions. We follow directions, right? But I know I have some men in here that are like, I don't need directions. I'll figure it out. This is not an IKEA cabinet. Okay, this is not something you can figure out without directions. I want you to watch the video. Thank you. Okay. So again, full videos are over there. Check them out. But I'm going to give you guys a little bit of a preview of this tracker here in a minute. And here's Kelly. Kelly's giving the tracker as well. Somebody found me on YouTube last night. Yay! My YouTube channel has been growing. So it's only been around for 2 months, but I've started to stream on there as well. And it's really been growing. Sean, you're going to get both well, there's only one tracker. So there's one tracker, but there's 2 videos. So the tracker is not separate, but it walks you through the fact that there's 4 different steps in the tracker. When you're a sole proprietor, when you don't have any employees, you only do step 1. So basically it kind of walks you through step 1 and how to complete that. I think we're all in this boat, Sean. We can all use any help we can get. Okay, so make sure, hopefully everybody's like, yes, I've downloaded it. I want to go check my stats after this, and I better see a whole bunch of you guys downloading this. Okay, so let's talk a little bit though, before we get into it. I need to caveat, always, always, always. Things are still changing. Okay, things are still changing. They probably will be for a while. The biggest thing that is changing right now, okay, is Congress is currently looking at doing some different things and actually giving a little bit more flexibility with the PPP. It has not happened yet. They've had bills in the past that didn't go all the way through. We don't know if anything will pass. In my mind, sometimes it's a little bit too little, too late. We're so far down through this. I actually, I was listening to a webinar from the SBA, and I thought this was such a perfect illustration of what is happening right now. The SBA person said, what we're doing is basically like building an airplane while it's flying. And I was like, that's exactly what is happening, right? Some of you guys are 6 weeks into your forgiveness period, and you're still like, I'm still waiting on like full guidance here. Like, there's still things we don't fully 100% know. So the Treasury is building out this guidance, right? Like the CARES Act came out, it's fairly general, right? There are some things that are prescriptive in it, but in general, it's what happens after that is Treasury takes that legislation and Treasury turns it into these interim final rules, right? So these interim final rules are going to be what basically give you the specific guidance. And then also they're coming out with the forgiveness application. And they're the ones that are saying, it's Treasury that came out with this 850 seconds rule. If y'all know, y'all who are sole proprietors know what I'm talking about, right? This 850 seconds of your Schedule C net profit is what you use. All of that was Treasury, not in the CARES Act. So my big fear is, okay, if we issue something and they issue kind of a legislative, fix, right, for this, maybe allowing you to use it over, they're talking about 16 weeks possibly now. What does that look like? What does that mean for all these calculations, right? What does that mean for owner pay? We have no idea because it's going to take time then. We're 2 months, guys, 2 months from literally, I think today. The CARES Act was passed 2 months ago. It is May 27th. Is that right? Yeah, March 27th. Where has 2 months gone? Oh my goodness, wow. Where has 2 months gone? But Treasury is still issuing guidance on that act and putting it into practice. What the heck happens when they change things? And you can guess, right? It's going to be a little while for Treasury to kind of catch up and redo these interim final rules. They're going to have to redo the application if anything passes. So my commitment to you is we got to go based on the rules we have today. You can't sit around and count on things changing. It's Congress, y'all. Remember, that's why we have the phrase, it's like an act of Congress, right? Like, because it can take forever and it's not guaranteed. So we have to go based on the rules today. Now, that said, I know that there's some consternation for people like, well, if I knew what the rules would eventually be, I would make different decisions. That's them's the breaks, I guess, in this kind of situation. All we can do is go based on the rules we have today. So I toyed around with, do we wait to give out this tracker? Maybe in another week, things will be different. No, y'all need this thing. You guys need to go based on what we know today. Now, if things change, make sure you're following me. Financial literacy for women business owners. Make sure you are in that group over there. And also make sure that you're subscribed to my YouTube channel. I'm going to be yelling from the rooftops if anything changes. Those of you who sign up for my tracker, if things change, I will reevaluate that tracker and make changes. Okay, so as we know that things are different from what you have in there, there may be a different version that would come out, and I will explain what those changes are, but that doesn't mean don't use the tracker now. I think we have to go based on what we know and start working with it, okay? So yeah, and a lot of questions, right? These are a lot of the questions. So they've talked about 16 weeks, they've talked about 24 weeks. More recently, it seems like 16 is where they're leaning if they do anything. Do you still have 8 weeks? I don't know. None of the bills I've looked through, man, I spent way too much time looking at the bills out there on like senate.gov or whatever it is. There are several different PPP bills out there. So who the heck knows what is or isn't going to pass? And secondarily, we don't know if that means like, okay, is Treasury then going to say, okay, pick an 8-week period, or do you really have 16 weeks? Or Treasury is going to be the one. The bill is not going to go into that detail. Treasury is going to be the one to interpret that. And that's going to take some time. Okay. So we're back into that waiting, right? Like finally we have some guidance and now they're going to change everything. And I'm like, oh, the accountant in me is just like, decide, make a decision, guys. We're flying the plane right now. We cannot change anything at this point in time. But I also understand that there is a lot of people it would really benefit to have some additional time to spend the money. So there you go. Okay. So, and you're welcome, Catherine. I'll put you up here just because that's nice of you. I'm trying really hard to keep you guys fully updated. That is something that I have committed to over this time period, is showing up for you guys. I'm not charging you guys a dang dime for this thing, you guys. And this was like probably over 100 hours of work between 3 different CPAs to make this tracker for you. So myself, Bree, Kelly, we spent a ton of time on this. Okay. So I really, but it is so important to me to get you what you need to help you make decisions. All right. So I'm going to jump on in. I'm going to jump on into the actual tracker and just give you a overview. Like I said, I'm not going to go through the whole dang thing because I've already done it and I don't think I have the energy to do it again. Okay. Thankfully I had my coffee this morning, but I was up way too late last night. I won't walk through the whole thing, but the YouTube videos will be in the email that you get. Please watch them. Okay. Okay. So I'm going to add this to the stream. So just lay of the land. I know this looks like a ton of words. Okay. You're going to jump into this and you're going to be like, holy moly, so many tabs, so many words. Okay. Pep talk for you. I promise, once you get into it and once you watch that video, it will be, there's only so much that you actually need to complete in here. Okay. So it looks complicated, but it is way less complicated than trying to read and put into practice the 11-page forgiveness application that basically reads just like a tax return. It talks about FTE reduction quotients, salary wage reductions. If this line is less than this line, go to line this times that. It's crazy. It's crazy, y'all. So we've put it all into a spreadsheet. So it just asks you a question, you put in the answer, and it does all the calculations for you. That is the key, okay? Okay, so somebody says, how do you get the tracker? balancecfo.com/PPP tracker. It's also above because you're a Facebook user. If you're on YouTube, the link is below. Okay. Okay. And yes, Lydia, you do need to come join this group. Okay, so here is what I want to talk about. This is going to give you, read the instructions. And I know we live in the age of like not wanting to read the instructions, but I tell you, putting a little bit of extra time into the front to watch the video and read the instructions will make you feel less overwhelmed, okay? I promise it won't be as bad. So jump in here, read this. This is just basically telling you probably can't see, it's probably a little bit small, but it's just the purpose. Obviously there's a legal disclaimer because you know what, please don't sue me, you guys. We did our best. We spent a lot of time on this. We think it's awesome, but things change. There may be changes that might pop up. You might have a specific circumstance that doesn't fit cookie cutter into this, which I understand. We really tried to think through that, but not everybody is going to fit into this. And it's going to go through the contents of the workbook. And importantly, for those of you guys are like, holy cow, this spreadsheet, down here it tells you if you are a business without payroll, what do you need to do? If you are a business with payroll, meaning you have employees, what do you need to do? Okay? They're different. So if you don't have any other employees other than yourself, even if you are an employee, if you have an S Corp or something and you're the only employee, you would go through the instructions for businesses without payroll for non-owner workers, okay? There are 4 steps. Simplifying this down, there are 4 steps to this process, okay? The only one you have to do if you are a sole proprietor is the first step. And and they're numbered down below. So the yellow tabs are numbered. The only ones you'll actually have to input anything onto are the yellow and one of the orange tabs. Okay, that's it. And you'll notice that, you know, it's going to scream at you. Yellow is the color that will scream at you to say, hey, you need to fill something in here, okay? Otherwise, if it's not yellow, you're not even going to be able to touch the cell, okay? Everything is going to work. And yes, indeed, it is. Y'all, if you saw the back end behind this Excel spreadsheet and the amazing formulas, if any of you guys appreciate a good Excel formula, like look through it a little bit, because I'm sorry, I'm going to toot our own horn here, but this thing is pretty incredible. Okay. So we don't even need, like, there was a bank I heard recently that spent like $120,000 to plumb a system that basically does what our spreadsheet does. So maybe just give me the $120,000. I'll give you the spreadsheet. That's my next business idea. Okay, so let's just quickly look at the blue tabs. Y'all, these are your application. This is your application. So if you look at the actual application for forgiveness that came out on the 15th of May, this is it. All right. Notice everything in here is blue though. That means there's nothing in yellow you need to put in here. So it's going to auto populate. So off of those yellow and the one orange tab that you have to populate, it's going to auto populate the entire forgiveness application for you, which then you would use to either go input that information into, you know, if your bank has a portal, right? Maybe it would ask for information that way. In some cases, you may be able to actually like send this over to your bank to get forgiveness. It just depends on the bank's process, and they're still working on that, so we don't really know what they're going to be. But this is going to fill out the whole thing for you. So once it's done, it will be completed. So you don't even have to worry about, you know, a lot of this stuff. Then the other form that needs to be turned in with your forgiveness application is the Ppp Schedule A. That was also included within the form. That all auto-populates as well, okay? So even this FTE reduction calculation and the FTE reduction quotient and all of that jazz is going to auto-populate once you put all the information you need to put into the tabs. Okay. So the only thing that you'll have to do on these 2 tabs is just review it at the end. Once you've put all the information in on the other tabs, just come back and look at it and say, does this make any sense? Okay. And I'm going to show you, we have a diagnostic tool that we added that will help you determine action items, right? Because we don't just want to track the PPP. We also want to know, what does this tell me about what I need to do now as a business owner? I'm 6 weeks into this period and I want to be able to get forgiven for as much as I can. this is going to tell you what you need to do. So that's the other thing that I kind of geek out about, is the fact that it also is something that can give you some advice on, hey, by the way, you're leaving money on the table. We don't want to do that. Okay. So again, I'm not even going to flip through. The only one I'm going to look at is step 1. This is where you're going to put in kind of the general information about your loan, the amount of the loan received, the date. You're going to pick your time period. So in the application, it now has entered into the fact that you can do this alternative covered period if you run payroll. This doesn't apply to those of you guys who don't have any employees on payroll. But if you do, you can pick an alternative covered period. So typically it's been, okay, the 8 weeks starts when you get the money, when you get the money, when you get the money. That's still true. But for payroll only, you could potentially pick this alternative covered period, which would mean, okay, I got the money on April 25th. My normal pay period runs from May 1st to the 15th. You can wait to May 1st to then be able to start that 8-week payroll. I do actually recommend doing it. I think it's going to be a lot easier, because otherwise what's going to happen at the end, more than likely, is you're going to have this weird time period that is accrued but not paid, that you're going to have to look into your payroll reports and like kind of carve up the time period, and it could get a little bit complicated. So I think it's going to be much easier if you do this and pick the alternative, but there could be reasons, depending, that you wouldn't want to do that. So it's up to you what you want to do. You can do either. You'll get credit if it's incurred or paid, y'all. That is huge. That was a new clarification as well, incurred or paid. So if you paid payroll, but it was in the 8-week period, but it was for April, but you didn't get the loan until May 5th, right? But you paid it on May 7th, that would still count. So that was a new add. And I believe that was a way that Treasury was trying to add some flexibility into the program without having to get legislation for it. I think they were like, okay, well, this way, essentially, it kind of can allow you to get another pay period in there, in addition to the 8 weeks. So it's the 8 weeks, what was incurred, plus anything else that was paid during that 8 weeks. Okay. So that really, I think, can be a helpful thing to get that amount of payroll up. Okay. Let's see. So you're going to fill in all that information. The other thing that's going to be on here that you'll notice is the Eidl Advance. Again, the video will walk through this, but remember, you guys, if you got that grant, that $1K per employee that was supposed to be a grant from the Eidl, all right, that has to be subtracted off of your PPP forgiveness. If it hasn't already been, in some cases, it might have already been subtracted off of your loan. But in general, for most people, you're going to have to put that loan amount in here, or that grant amount in here, and it's going to subtract it off the total amount of PPP forgiveness. So it's basically going to calculate all your forgiveness. It doesn't change what you need to spend on what, right? That's a question I keep getting, is, does this impact, does that mean like I only have to spend less amount on payroll? No, spend the whole PPP as you normally would. And then whatever is deemed to be forgivable, they're going to subtract the Eidl Advance off of that. So a lot of people were like, well, I just won't spend a portion of it. That won't work. If you don't spend a portion of it that relates to your Eidl Advance, they're still going to subtract it off whatever is forgivable. So make sure you maximize your forgiveness as much as you can. Again, the YouTube videos will talk about that. You'll put in owner pay. So depending on whether you're an S Corp or C Corp, partnership, sole prop, it's going to walk you through that. And then on this tab, you're going to put all the information outside of gross wages for your employees. So any other things that you're paying for, and there's a drop-down box where you'll be able to select it. So again, I'm not going to go into all the detail, but that's the general lay of the land. If you're a sole proprietor, this is the only tab that you really need to complete. If you have employees, and I say sole proprietor, what I really mean there, because you can be a sole proprietor and have employees, what I really mean there is if you don't have employees. And even if you're an S Corp and you're your own employee, you still would only complete this one, because your owner pay you won't put your owner pay on any of the other tabs. The only tab it goes on is here. You're not considered an employee, even though you are from an accounting perspective. If you're a corp, you're considered an employee. For the purpose of this, they're not counting you in that FTE calculation. That's only actual employees that you hire. So some people were hoping, hey, I didn't have myself on payroll last year. I'm a corp. I'm going to put myself on payroll, and I'm going to basically take the place of an employee that's not coming back. It's not going to work. So we hoped that it would, but when the forgiveness application came out, it was clear, look, you're not counted in that FTE calculation, even if you're a corp, and you pay yourself a salary. Okay. So here we go. So I'm not even going to run through 2, 3, and 4, but suffice it to say, on those tabs, you're going to put all the information about payroll and the people that you pay and who was on payroll during your comparison period, who was on payroll during the 8 weeks. There's going to be an averaging. It's going to, all behind the scenes, it's going to decide, okay, which is a better calculation for you between, they give you 2 choices for calculating your full-time equivalent. So that's all in here. And the spreadsheet will automatically tell you and calculate for you and pick the one that's going to be better for you. Okay. So know that that's already kind of plumbed in here to make sure that you have the most advantageous thing. You also can choose your covered period that you compare against when you're looking at your FTE. So it'll show you what those choices are. You can either choose January, February of 2020. You can choose February through June of 2019. You can choose, if you're seasonal, you have some additional choices. So it's going to show all of that. Okay. So it's going to give you all of those. Okay. Yeah. And Michelle says, what about seasonal? Yep. This will cover a seasonal as well. It'll allow you to pick that covered period that would apply to a seasonal employee. So you're going to have all those choices in here. It's going to simplify it. And just there's a drop down. So just make sure anytime you see a drop down that you are answering it if it's applicable. Okay. You don't want to leave the stuff blank because the calculations won't necessarily work the right way. But make sure to watch those videos. Okay, so we're going to skip ahead. I'll just show you really quick on this on step 3. So step 2 is where you're going to calculate your full-time equivalent employees for the comparison period, the one that you're going to compare against to the 8 weeks. Now, it doesn't matter. Everybody keeps asking, does it matter what I put on my application? No. It does not matter the number that you put on your application for number of employees. That was for a different purpose. That was so that the government can sit around and tell everybody how many jobs this is saving. That's really what that's used for. That is a different purpose than this. You're going to do that FTE calculation for the covered period and the comparison period when you do your forgiveness. Okay. So, and make sure that you're comparing apples with apples. That's really important. Okay. So when we get to tab 3, the main thing here, there's only a couple of questions and I'm not going to go over these because the video does, but you're going to make sure to pick whatever type of payroll you have, weekly, biweekly, twice a month, monthly. Hopefully it's one of those. Okay. If you aren't on a typical payroll cycle, you want to get on one. All right. That's going to be important. And you're going to only fill out the tab, the orange tab that corresponds with the one you chose. So there's a weekly, a biweekly, a twice a month, and a monthly. Okay. Now, just real quick, that alternative covered period that I talked about, where you can pick the first date of your payroll when your next payroll run starts after when you got the loan, right? So if you can kind of flash forward to the next payroll run, and that's when you start the date. That only works if you're running payroll at least biweekly, at least every other week. It does not work if you're running payroll twice a month or monthly. So again, you could switch if you wanted to take advantage of that and change your payroll periods, but that's just an aside because that was kind of a caveat in there that I wanted to mention. So you're going to fill out your tab. It's going to include information about who your employees are, how much they worked, basically, what you paid them, and it's going to capture all that information in there. So once you put all of that in, a lot of that can come off of your payroll reports. Payroll providers as well are working on taking the new guidance. I know Gusto is, I know ADP is taking that new guidance and turning it into payroll reports that you can pull and get this information easily, hopefully. So I'll be interested in have come out with, but hopefully I do think even if they do the FTE calculation for you, I recommend, especially if it's not coming out how you want it to, I recommend doing this as well and kind of using it as a sense check. Now, it could be slightly different depending on some assumptions that we made in calculating this, some assumptions that they're making. Everybody's having to fill in some of the details. We have the majority of how this thing works from the guidance that we have outstanding, but there are a few things that are still, you have to take a little bit of liberties in the calculation. And as long as it's a reasonable calculation and you're applying it consistently, you should be fine. Every tab also has a box on it that has some directions. Okay, again, this looks like a lot, but if you're filling this in and you're like, I need more information on this, tell me more. Additionally, if you're doing this and you're like, I want to actually read the application, what is this question trying to get at? And you're trying to understand how that's working. In the back of here, you'll see all these green tabs. They're probably pretty tiny. These are screenshots of the application itself. Okay, so they're there with a link to it, so that if you're trying to figure out, like, okay, what is this Schedule A? Here it actually is in print. So that can be helpful if you're just wanting to kind of understand this further. That does exist back there. Okay, so again, you're going to go through step 1. That's the only step if you have no employees. 2, 3, and 4, you're going to do and give information on your employees, if you have them or if you had them. So if you had them in 2019 or 2020, you're going to have to go through those steps. And then here's the fun part. I think it's fun. It's the Diagnostic tab. Do not look at this until you've filled out the rest. Now, I do recommend, right? Because what this diagnostic test is going to do is it's going to say, hey, you have extra money to spend on payroll that you haven't spent, or you have extra money to spend on non-payroll, or you're not meeting your head count, right? And there are things, if you're still, especially if you're still in that 8-week period, and especially if you're still before June 30th, there are things that you can do to fix those things, or at least make them better. And what this is going to tell you, especially in these recommendations right now, they're all green because we're good, because it's all 0. But this is going to spit out some recommendations for you that say, hey, you have more money to spend on payroll. Go give some bonuses or something like that. So this tab, you want to go through and fill out all of this, even if you don't have all the information, and project out, like, okay, I haven't paid the last 2 weeks' salary yet, but I'm going to project what those amounts would be. And then I'm going to come look at this tab and see what that's going to mean for me for forgiveness. Okay. And it's going to give you some of those prompts to say, hey, go back and look at this. Hey, maybe think about prepaying some of your rent. Okay. Because now we can do that. Remember, incurred or paid now, meaning there's some opportunity for prepayment on some things. I think prepaying payroll might get a little bit sticky. I don't know if I'd get into that, but rent, utilities, perhaps so. So this is going to give you some of those prompts to say, hey, take a look back at this tab and think about paying, some additional money here to maximize your forgiveness. So you'll want to take a look at this again. Make sure that you're doing this as you are in the middle of that time period. So again, it may mean you have to kind of project out some of those expenses and project out what your non-payroll is going to be, project out what your payroll is going to be, and see what that's going to mean for you. And then you can go back and make adjustments. Maybe pay some additional hazard pay, some additional bonuses to employees to try to use up more of that money. You don't have to use all the money, importantly. You don't have to use all the money. Whatever you don't use, you can just give back, or it can turn into a loan. So I think a lot of people were worried about this 75% threshold. You don't have to hit 75% payroll. You only have to hit that if you want the full 25% for a non-payroll to be able to be forgiven. Okay, that's where the 75% comes in. You could spend 50, but then only, I think the math works out that about 16% of the loan is what you get for non-payroll. So it all kind of plays off itself, and it plays off that payroll number right now. Again, Congress right now, though, is looking at kind of changing that 75% anyway. So you may see some changes to this, but for now, we have to go with what we know. Okay. So, and unfortunately, Sean, I gotta be the bearer of bad news. You can't give yourself a bonus. I know, right? So owners are actually, limited in what they can take. Right now, it says 2019, 8 weeks of your 2019 pay. And the way that gets calculated is going to be different depending on what you are. Sole proprietor, it's probably your Schedule C net profit. S Corp is probably your W-2 wages. C Corp, right? So you cannot, though, give yourself a raise. You can't give yourself more than 8 weeks worth of payroll right now. But you can give your employees a raise. There's no threshold on being able to pay your employees more. They just don't want owners saying, well, I'm just going to pocket more of this, right? So unfortunately, owners' bonuses are not going to be an option here. Dang. Okay. So, and Emily asked a good question. What if you started your business in 2020? So here's the deal. I don't know how they need to fill this in, because right now some people did get their PPP based on 2020 and January and February 2020 numbers. If that was you, it doesn't make sense to, base your payroll that you pay yourself on 2019. But right now that's the way it's worded in the forgiveness application and in the interim final rule. It limits it to 2019. team. So some sole proprietors are like, well, I don't have any employees. I got this loan. Does that mean I can have nothing forgiven? I think that they will hopefully remedy that. I actually think there's still potential that they put out just a streamlined application for those people who don't have employees, but it's yet to be seen. So until then, we're all working off of the same information. But yeah, I think that's one of the open items that we still have is, 2 months later is how does this work for those new businesses? Okay. So if we keep going down here, and again, this might be a little bit small, so let me increase this. Okay. So it's going to also summarize for you the total PPP you spent on payroll and non-payroll, the amount of the loan that was unspent. It's going to calculate out if you're an employer, it's going to give you your FTE count here. Okay. And then it's going to calculate out your forgiveness. So again, you'll see something similar to this on the actual application. So you'll want to go look and see what the application says. But total loan amount, PPP forgiveness, this is the amount that you would be forgiven. Then we got to subtract that EIDL loan. Here's the total amount forgiven. Here's the total that becomes a loan. Or again, you can always, when you apply for forgiveness and there's an amount that is not forgiven, you always have the option of just paying that back. So you could just not spend that portion. And that's the other good thing here is that if the portion's not going to be forgiven, this can allow you to know that ahead of time and make decisions based on that. So maybe not spend that money so that you can give it back, because there's a lot of people who are just anti-debt, right? They don't want to take that additional debt on. So hold on to that money and just don't spend it, and you should be okay. Okay, so that is really again, and once you go through all this process, then I just want you guys to come on straight back to the actual loan application and review the amounts that are in it, all right? So, because again, it is up to you. The interesting thing here, you guys, interesting thing on all of this is the fact that what they're basically telling people is banks, you guys are essentially, Treasury's basically saying you're kind of held harmless, for this being correct. So a lot of businesses, it's on you. It's basically saying it's on the responsibility of the business owner to make sure that this is done correctly. So the banks are, they may do very little due diligence in some cases. They may just rely on here, you signed these certifications, and there is a sheet of certifications that you have to sign that say, look, I didn't pay myself more than 8 weeks of owner payroll. You're certifying a lot of things in there that you used the money correctly, et cetera, et cetera. But you are the one who's going to ultimately be responsible for this. Okay. And so that's something, it's weighty, but also I think if you have a tool like this that can help you, hopefully it'll make you feel a lot better. And I really think if you were to send this, and you don't have to, I mean, most banks, it's probably just the application and the Schedule A, and then plus any support that you need to have, like your 941s, if you're an employer, your Schedule C, your utility bills, things like that. If you send this over to them and you're like, hey, here's all my documentation, here's all the information and the calculations, I think most banks would be like, heck to the yeah, this person's got their stuff together, versus those people who are like, I don't know, try to pull it from wherever. But know that it is you, the responsibility of the business owner, to make sure it's correct. So make sure that you're reviewing that final calculation form and making sure it looks right. Because, if you didn't enter something correctly or something, into one of the tabs, maybe it's not pulling correctly. So that's on you to make sure, okay, this makes sense. I understand what this is doing and how it's calculating it. Okay, so let me look at your questions, y'all. A couple people are asking, check the link above, balancedcfo.com/PPP trackers, where you can find it. If you're on YouTube, check the link below. That's where you will get it. Again, it will come with YouTube videos that will be full tutorials. You need to watch it. Okay, so carve out some time and watch it on YouTube. Okay. Let me see. So, I love this. I don't know who you are. If you don't, so StreamYard is what I use to do my streaming. Go figure. I love it. It's amazing. If y'all are interested, go to balancedcfo.com/StreamYard, and I have a deal out there. I think you get $10 off if you sign up through me. Anywho, I love it, but you have to give it permission to know who you are. So otherwise it just tells me Facebook user. So, hey, Facebook user, you're welcome. I'm glad you're excited to do this. I know, again, I know some of y'all are going to open it up and be like, it's too much, but let me tell you, watch the video, go through the process. it is simpler than the actual. So what I've been saying is like, I feel like to most people, right? The way they've written the application, it sounds like calculus. Like it's like calculus. I think what we've done in this spreadsheet is take calculus. We can't get you all the way down to like 5th grade math, not quite, but we can get you down to like algebra, right? And I think most people are like, yeah, I got algebra, I can do algebra. So know that it's going to take a little bit. It's going to take some work. It's going to take some manual entering in, especially if you have a lot of employees. It's going to take a little bit of time and work to get there, but it will be simpler than trying to go and the calculus route, I'll say. Thank you, Vicky. Okay, let's see. Oh, thanks. And Bree's got me. She's telling me who. Thanks, Angie. Okay. Let me see your questions now. So if you still have questions, ask them, because I'm not going to go all the way back up to the front. So if you still have questions, go ahead and put them down below. I'm going to work my way down. If I had only one FTE on February 15th, then that's what I need to have for the covered period. I had one part-time person in January. Yes. So the safe harbor works such that even if during the average, so remember, you're going to average, right? So you're going to take average of 8 weeks, average of covered period. So let's say you waited a month to like bring back an employee, that's going to impact your average. So, if you had one half-time employee, that counts as 0.5 normally. If you waited 4 weeks and only had them on payroll for 4 weeks, they're actually going to calculate out to 0.25 over that average, right? And then you're going to calculate that back to the covered period, which you get a choice on, which is in the spreadsheet. Now, the safe harbor is basically saying, look, even if your average comes out that you should reduce this, right? As long as you get back by June 30th, or at least June 30th, so it could be the week before June 30th, depending on when your timing falls, but at least maybe by the end of your covered period, or at least June 30th, you are back to your old FTE, okay? Meaning you had one part-time employee, and you can use it. There's a convention where that alternate method for FTE is just 0.5 for any part-time employee. You had one part-time employee during that time period that hit during February 15th. So basically the payroll period that was over February 15th is going to be compared to one by no later than June 30th. So we're using in a lot of cases as June 30th, but it may be even earlier that you get it back there. And as long as you restore it, you're good. Same thing with wages. So if you paid a salary of $30,000 a year, and you were like, you know what, we're taking you down to $20,000 a year for the COVID period. As long as you get that back up to the full $30,000 by June 30th, no later than June 30th, you will be held harmless. So that's why that June 30th date matters, right? It's by the end of your covered period, you could see it as, or by June 30th, that you've kind of restored to previous levels. And if not, you've documented, like an employee won't come back because they don't want to. You have documentation showing you asked them back. You have unfortunately had to probably actually report them to unemployment, but it won't count against you in that case. But for you, yes, you would look at that February 15th to the June 30th and just make sure you were back on track, and then you should be good. And then all these complicated calculations for salary, wage reduction, and FTE reduction quotients and all of this jazz won't even matter for you guys. So that's my big kind of recommendation. Okay, let's see. Yeah, and let me just give another shout out. Bree and Kelly, they have been my partners in this. We have spent countless Marco Polos to each other, working through this, trading off who's in the document. But I think it's awesome. So, and thank you also. We had several testers. So if you were part of the focus group for testing last week, thank you guys. You'll see that most of your feedback has been incorporated in here in some way. So thank you guys if you were one of our focus group testers on this thing, because we did want to actually have real world people testing this thing out before we rolled it out. That's why it took a little while. Okay, does the payroll date apply to date employee received money or date funds were withdrawn from my account? Generally, I would say, because you're talking about, you're gonna have to support it. And usually how you would support that is your payroll report and probably your bank statement to show it actually came out. In that case, I would say probably when the money left your account. That is when you spent it, right? Now, could there be some flex in there? Maybe. Again, our bank's going to go through this with a fine tooth comb. Doubtful. But I would say probably it would be the actual time that you left it, because you won't know. If you were writing checks, for example, you don't know when your employees are even cashing those. So it would be when you actually wrote the check. Okay. It's been years since algebra. That's what my POS system is for. I know what you mean. Even as an accountant, I use my calculator on my phone for literally even simple math. And so I'm with you there. Okay. Sole proprietor, no employees. How would you input payroll if you just pay yourself by the job once the job completed and payment received? There's no set payroll date. Right. So if you're a sole proprietor with no employees, your forgiveness for your owner pay is going to be based off of your Schedule C, net profit. So go back to your tax return for 2019. Hopefully you have filed it. If not, I probably would go ahead and get that in. It's probably what you use to apply for the loan, right? They're going to use line 31, Schedule C, net profit. Pull that amount, okay? And divide by 52, multiply by 8. That's the amount you can pay yourself as an owner. Now, I keep saying this. Treasury guidance is clear to me. To me, it is clear. You do not need to actually, as a sole proprietor, if you're not a corp, show proof of payment to yourself. Why? Some of you guys are independent contractors and don't even have an extra bank account. And the idea of paying yourself doesn't even make any dang sense, okay? Also, as a sole proprietor, you don't pay taxes off of what you take out of your business, right? You pay taxes off of net profit. So the idea of forcing you to write a paycheck to yourself and write a check to yourself for an amount of money when you're not a corporation, when you're not on salary, does not make sense. Because here's what you would do, right? In this case, so people were asking, well, wait a second, I'm worried, I'm going to have to show my bank that I paid myself. And in some cases, banks might get this wrong, but you guys, absolutely nowhere in Treasury documents does it say you have to show payment of payments to yourself as a sole proprietor. Nowhere. All right. I challenge you to look. Some people have told me that I'm lying about that. It is not there. It says the support is your Schedule C. Go back to the interim final rule on the 14th of April. Go look for what it asks you to support as a sole proprietor. It says your Schedule C net profit is what you need. That is your support, meaning you will be forgiven for that amount, no more, no less, regardless of what you actually pay yourself. Could some banks get this wrong? Absolutely. As we saw with even how this rolled out, banks did the calculations wrong. They didn't understand the Treasury guidance. In a lot of cases, they were letting you guys use independent contractors where Treasury guidance said you couldn't. So could banks say, show me your bank statement where you actually paid yourself? Yeah. Will I roll my eyes at it? Yeah. So go ahead, pay yourself. But here's the thing. If you need that money in your business, as a lot of people have said, look, I got to pay some independent contractors. I can't use this money to pay myself. What you would do if you're worried about it, and if you're worried your bank is going to ask you, first you can try to clarify with your bank, hey, I don't need to actually show you proof of this. And they might be able to tell you. Alternatively, you can pay yourself that money and then you can put a capital contribution back into your business. Silly, right? That's exactly why it doesn't make any dang sense for sole proprietors to have to pay themselves. It makes sense for corporations because your taxes are based on your W-2 earnings, not for sole proprietors, not for those of you who are LLCs, sole proprietors, non-corps. I just went on a tangent. Sorry, Facebook user who asked this question, but this is one of those things I get asked over and over and over again. And there's so much misinformation out there about it, but ultimately that is my advice for you. But for you, use your Schedule C net profit. That's going to be the amount that your forgiveness should be based off of. Again, I don't trust these banks sometimes. Okay, Jan, who is watching me over on YouTube. Hey, Jan, I own the office I run my business out of. Can I use the PPP to pay myself rent? I have a lease between my company and myself. I think it's going to come down to support. Yeah, so as long as it's arm's length, you have support for the lease. I haven't seen anything that says you can't, right? So just make sure it's an arm's length transaction. Obviously, if it's you've got a spot that should be $1,000 and you're paying $10,000 in rent for, right? But if you have an agreement, if that was a lease that was enforced before February 15th, and if you can show payment of it, I would think that it would count. Again, check with your bank. In a lot of these situations, your bank is going to be the one making the determination where Treasury rules do not clarify. That is also true. I think I saw somebody in here ask me, because they always do, about home office deduction, utilities for my home, if I work out of my home, that kind of stuff, right? Can I deduct a portion of it? Well, firstly, We don't know. Treasury guidance, not super clear. It seems to be leaning towards like, hey, like what would count as a warehouse that you're paying. That's the example that they give even for sole proprietors. You have a warehouse where you're storing goods, that rent. Doesn't ever walk into specifically if you're a home office, does it count or not? It does say that you can't get a deduction or can't use PPP for it if you are not eligible for a tax deduction for it, right? So like your full home or your full utility bill for your home, not going to work. But maybe that percentage square footage, the same way you would calculate it for taxes, right? If you do the home office deduction for taxes and you take a part of your utility bill for that, potentially you might be able to use that. We don't know yet. And in absence of specific Treasury guidance saying, yes, you can do this, it's going to be up to your banks. So check with your banks. That's going to be my answer to all of these where people are asking questions about specific things that Treasury has not weighed in on yet. Unless they do, which they still could, right? Your bank is going to make those decisions. And some are going to have, and it's going to be inconsistent. It just will. So check with them. The better documentation that you can have, right? If you're handing them your whole utility bill for your house, no. But if you can show them, hey, here's my utility bill. Here's how I calculated out my percentage, usage. Here's my tax return from last year and how I calculated the deduction last year and took that deduction. You've got a better shot. Okay. Let's see. Kate says, I'm an S Corp with one employee, so I disregard where it says do not include owner here, correct, as I am an employee of my own. No. So, oh yes. Okay. So as an S Corp, even though you're an employee, you will enter your own owner pay on that step 1 tab, not on step 2, 3, or 4, where it has you list employees. Okay. You will not be listed on any of those tables. I know that's a common issue we're going to run into because of the terminology, because technically you are an employee of your business. But for the purpose of how they're doing this calculation, you get added in differently. You get pulled into a different specific line because they want to see owner pay separately. Okay. So you actually won't get called into that. So you'll see on the top of those trackers, all the ones where you're not included, don't include yourself, but it says do not include owner pay, even your own employee pay. Okay. Yeah, Balance CFO, you're on YouTube. So it should be down below. I think it's down below. It's balancecfo.com/PPP tracker. That's where you will get it. If you're on Facebook, it's above you. Okay, let's see. All right, how does the FTEE that goes on disability maternity leave get calculated for FTE? They haven't clarified this specifically. What I would imagine is any amounts you pay should count. I would enter them in as an employee. I would not have that count against you for your FTE calculation, because that wouldn't make sense, right? And technically you haven't taken their wages down because the way the wage calculation works, guys, we thought for a long time it was going to be total comp. Like, okay, I'm a server. I'm normally working. I make $3 an hour, right? Or whatever it is as a server. It's been a little while since I've been a server, but it was like $2.15 an hour when I did it. I think it's like 3 something now here. So anyway, that's your hourly wage. But then a lot of what you get paid is tips, right? That's a lot of it. So we thought, because you were able to use tips when you calculated out your PPP loan for your employees, we thought that meant you were going to have to make up for those tips, right? Even if your restaurant was closed, that you're going to have to pay those employees the amount with tips to not hit, right, that threshold that says you can't pay your employees less than 75% of what they were being paid. Again, that's another one of those things. They loosened up a little bit because I think they realized this was going to be a bit of an issue for a lot of people. So they loosened it up a little bit. And now how it reads is, as long as their average annual salary, right, like their annualized salary, or if their hourly wage has not changed, it won't impact your salary wage calculation. Now, if your hours come down significantly, if you had a full-time person that became a part-time person, that can impact your FTE calculation, but it won't impact your salary and wages calculation. So if you had somebody who was being paid $3 an hour before and they're being paid $3 an hour now, you can get that forgiven even if they're not getting the tips they normally would. So that's something to keep in mind. Again, most people didn't in this change salary levels, right? You might have changed how much your people were working, but you weren't actually changing their salary levels that were on payroll for. So, so that gives a little bit more flexibility here. Okay, a couple more questions. I got 5 more minutes. Okay, question from Tanya. What about full-time teachers from pre-K at daycare centers? They were counted in the FTE, but now they're out for the summer. They return in August. So the unfortunate thing here is that whoever you include, it doesn't have to be the same people. You can switch out people. But if you want that forgiven, you would need to pay them anyway during the 8 weeks. So that is something that has been hard for businesses that are seasonal like that, to where if you don't have anything to pay them, you normally wouldn't be paying them over the summer. You need to pay them anyway. And it may be hazard pay that you're paying them, whatever it is, you're supposed to pay. Now, if you don't, you just won't get it forgiven. And if you pay 0 in payroll, right, then you won't get any non-payroll forgiven either. But you may still be able to get your owner pay forgiven potentially. So you'll want to use the calculations to see what makes sense. Because remember, while this is quote unquote, right, no such thing as a free lunch, but I'll call it free money, right? The forgiven amount is yours to keep. It isn't necessarily that straightforward in all cases, right? You do still have to, if you're paying back employees and they wouldn't normally be working, you got to pay employer taxes still on those people, right? So that 7.65%, that's something you still carry as a burden is that. So so you have to make that decision based on what makes the most sense for your business, not just like, I'm going to spend all of it because I can. That may make the most sense, or it may make sense not to spend all of it and just get a portion forgiven. When you work through the spreadsheet, you'll be able to see what makes the most sense to you. Okay. Are they allowing owner disbursements as 2019 earnings? Yeah, so I talked about that a little bit. It's going to be based off of 2019. That's how you're going to get to what you can pay yourself as an owner. It kind of depends on what you are. I wonder, Step Forward Day School, is this the one in Franklin, Tennessee? I know there's a Step Forward in Franklin, Tennessee. That's where I live. So if it is, hi. If there are 2 owners, on the tab where you put in the information on owner pay, there will be a part for partnership. You will add them together. So your owners, each individual one can't make more than a specific amount, and that amount is detailed on there. For partners, it comes off of your K1 schedule, what you can pay yourself as a partner. So take a look at that, but that will be included on that step 1. Let's see. I don't have payroll set up yet, but I'm a corporation. Can I pay myself through draws? I thought so no. So the way it is looking, similar to PPP, it was only on, and the way, and I read it, so it doesn't specifically say, but for PPP, when you applied, you could only use W-2 wages. And in here, it says something to the effect of your wages as an employee owner, right? Which your employee owner, the part you get paid as an employee is your W-2 wages. You're taxed on those differently. They want you taxed on that with payroll taxes. If you're setting draws up, you're not paying payroll taxes on that. Essentially, draws basically for a corporation are a way to get out of paying payroll taxes. You save 15.65% because you're basically saying, I'm not getting that as compensation for working in my business as an employee. I'm getting that as compensation as an investor. But you're supposed to pay yourself reasonable salary via W-2 wages if you are an S-Corp owner. I'm going to do a special bonus training that's coming out in my basics course, by the way, about S-Corp and what you need to know as an S-Corp owner, because there's been a lot of people caught up in this that were like, wait, what? I need to be doing what? So sign up for the waitlist, balancecfo.com/FFB waitlist. And there's going to be kind of a bonus just for S-Corps and what you need to be doing. But yeah, you'll need to set up payroll. Now, you can do that. So Balance CFO, I have so many links, y'all, and I know them all. balancecfo.com/Gusto. Gusto is my payroll provider of choice. You guys should check them out if you're looking for a payroll provider. I love them. I think they make things so much simpler. They are running reports that are awesome to help people with this process. Everybody I know that's been on Gusto during this and has been pulling the reports and everything from them have been just super impressed by the customer service that they've gotten and the reports that they're getting. So go check that out. You can get yourself set up really quickly. I mean, it doesn't take a long time to get yourself set up on payroll, and it's not very expensive either. So go check that out, balancecfo.com/Gusto. It may give you, I'm not sure if it gives you a percentage off or not on that one. I'm not positive, but use my link because I appreciate it. Okay. All right. I'm going to take last question here because I got to go. And now it's a long one. Okay. LLC taxes S Corp. I paid myself too much knowing before knowing the rule about it. My payroll bank account is separate. Can I reimburse and pay the employees more? Okay, so here's what I would do, but not violate the 8-week rule. You can pay your employees more. You don't necessarily, so you can take more in wages as an S Corp owner. You're only going to get forgiven for 8 weeks worth. And that's what you would put on the application is that 8 weeks worth. Okay, so you can pay yourself whatever you want, but your forgiveness is limited to 8 weeks worth up to a max of $15,385. So you can't pay anybody, any employees or yourself over that 8-week period more than $15,385. That number comes from taking 8 weeks worth of $100,000. So you're capped at that for your actual salary. But yeah, so you can transfer it back if you want to, or if you have the cash, you can just pay out extra to your employees, and you're just going to be capped. You're not going to be able to use all of that for forgiveness. Okay, I lied. I'll give another. I'll do another question. Okay, since I plan on applying next week and the deadline is June 30th, can I pay my mortgage in advance on my brick and mortar? Be paid in advance? No. So the one thing they say you cannot prepay is mortgage interest. So mortgage principal doesn't count anyway. So your actual principal on your mortgage, because you're getting equity for that, that doesn't count. Only the interest portion would count. And you can't prepay mortgage interest. Only rent, utilities, but that's the one thing that specifically is called out to say you cannot pay it is mortgage interest. So. But maybe check with your utility company and just write them a check. I don't know. Let's see. Staff resigned before COVID. We still have to include them if we listed them in the February. So it doesn't go based on what you listed in the app, but it goes based on who was employed during that covered period that you choose. So you get to choose. There are basically 3 different options that you can choose from. They're in the spreadsheet on what your comparison period is. And if they were employed then yes. If they resigned before it, that probably would not count. You would probably, to get full forgiveness, have to go hire somebody. Okay. All right. So I am going to, hey, you've made this whole process. Yes. Okay, good. They are in Franklin. Hey, step forward. I'm right down the road. VHS, that's my high school. Go Bruins. A little while ago. It was a hot minute ago. Hot minute ago. Okay, guys, I'm done for the day. I hit my hour. You guys are awesome. Make sure you're in the Facebook group, Financial Literacy for Women Business Owners. Make sure you have signed up for the tracker and you've watched the YouTube videos related to them. You just get tons of me, so much me. You can just put them on the 2X so that I talk super fast, even though I already talk pretty fast. Let me know what your questions are. I'm glad that you have gotten your questions answered, Sandra, and I'm so happy to be here to help you guys. Okay? All right. Bye, guys. See you later.